General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Friday the 13th. Probably ain't come out with no movie. They just don't care no more. I don't think it was TGIF. Spy is very interesting. He came back to the 200s on CFDs. Let me see on ES. Did we hit the 200? Current contract. We're below it. Okay. So let's go back here. This is my spot chart. So on the regular spot chart, we're not there. This lines up with the futures. Got my target here. I'm gonna stay locked in. Anchor point confirmed. It was Tuesday. Expansion played out. It didn't have TGIF. I think I might start doing SPY on the third ticker. I was thinking about Bitcoin. Just don't got no third ticker. Bitcoin be moving, but it gotta fit. My life. It's a New York reversal model. Let me see this. Power gap. That was pretty textbook. We kind of set up that out here. We got the internal range liquidity. Textbook. All right, let's do the charts. Nice premium retracement to H1 fair value gap for the sale. Let's look at the H1. Monday's low stay. This was wishful thinking. I was like, maybe we can go even lower. It was like, nah, we done. Previous week's low, so we revisited. The price just filled. The week opening gap and stopped on the 200 SMA. Both indexes on the 200 SMA. Simple moving average. Let's go here on the daily. The way that candle closed, looks like we're gonna gap down. Price sold off until closed and closed with a flat bottom. No funds do not want to hold risk over the weekend in this environment, in this war environment, because you might come back and read it and be like, what environment is it? Was it sunny? Invite Ronald. That was the engineered liquidity yesterday too for the SPX, just how it was chopping in New York AM session. So like this high and this low was like, we need to come back. That's exactly what we did. GG's, plan to trade the plan. OLR at New York AM high from yesterday. Two pair sale orders and offset. How you in offset? Run down to Get the daily. Got a little wick here. Hold up. This is the hour. Hold on. Okay, that's the correct one. Get the correct link. Alright. H1 is here. It's pretty much the same thing. Nothing really stands out to me that's different. Yeah, I think that stands out. Delivering. That is noteworthy. Okay. Alright, selling off to go into the weekend. Next week is big. Fed fund rate, options expiry, quad wedging, war. Probably some more stuff too. Yeah, the framework played out. Let's stick to the plan. Keep grinding. Getting better. Watch for tomorrow. Tomorrow's a study day. Boom. All right, that's that on that. Y'all have a good day. Peace.